There are several pillars that makes US create companies that are stellar and global, like Google, Amazon, Meta. All of them at their initial primordial stages were invested through venture capitalists. Who are these venture capitalists? Where do they get their funds? And how much funds are we really talking about? Stay tuned.
All right, we're going to pull back the curtain on one of the most powerful and honestly most misunderstood forces in the world today, US venture capital. In this explainer, we're going to bust some myths and find out what really fuels the engine of innovation. So let's just jump right in with a question. When you think about the companies that have totally reshaped our lives, I'm talking Google, Tesla, you name it, who do you picture funding them in the very beginning? Some visionary billionaire maybe? Well, the real answer's gonna surprise you. You know, the myth we all kind of believe is that venture capital is just some super rich person stroking a personal check for a wild idea. But the reality, especially in the US, is something completely different. It's way more likely that the money actually comes from a teacher's retirement fund. Yeah, let's break down how on earth that works. Okay, first up, let's just completely dismantle this idea of the lone wolf billionaire investor. This is the picture you see in the movies, right? Some maverick investor betting their own personal fortune on a long-shot startup. It makes for a great story, but for the most part, that's all it is, a story. Because in the United States, the whole system is built on a totally different foundation. It's not about personal fortunes being gambled, it's about something way, way bigger. So, if it's not the VC's own money, then where does it all come from? It's time to follow the trail. Get ready for this number, because it's a big one. A staggering 98% of all the capital that US venture funds invest comes from large institutions, not from the venture capitalists themselves. They've only got about 2% of their own skin in the game. And when you actually break it down, it gets even more fascinating. Take a look at this. The single biggest slice of the pie, 35%, that's public pension funds. We're talking about retirement money for firefighters, teachers, state employees. Then you've got another 15% from university endowments like Harvard or Stanford. And look all the way down at the bottom. That tiny little sliver, 1 to 2%, that's the personal money from the VC partners themselves. It's almost nothing. So what do we call these big institutional investors? The official term is limited partners, or LPs for short. You can think of them as the quiet giants behind the whole operation. They're the ones entrusting VCs with billions of dollars that need to fund retirements and university research for decades. And this is the key takeaway. VCs aren't cowboys gambling their own money. They are professional asset managers. Their job is to take this huge pool of institutional cash and generate massive returns. And having that responsibility completely changes the game. This leads us directly to a really unique investment philosophy, one you pretty much only see at this scale in the US. It's called the powerlaw mindset. This quote just nails the brutal logic of it all. See, when you're managing a pension fund's money, a bunch of small, safe wins just won't cut it. You have to swing for the fences. You're hunting for that one, single company that's going to hit so big, it pays for all the other failures, and then some. This slide really puts it in perspective. Most of the world invests to lower risk and get nice, predictable returns. But US VCs, they do the exact opposite. They embrace enormous risk. They're not looking for safe bets. They're hunting for those massive outliers, because they know that one grand slam is all that really matters in the end. 1000x. I mean, think about that number for a second. That's the grand prize. That's what a home run investment, like an early bet on Google or Nvidia, can do. It's a return so massive, it sounds like a myth, but aiming for that exact number is what shapes the entire US innovation landscape. So this high-risk, almost crazy-sounding strategy, does it actually work? Well, let's take a look at the results. The data is pretty darn clear. Over the long haul, US venture funds consistently deliver annual returns between 20 and 25%. That absolutely crushes the returns you see in China or Europe. It turns out the highest risk is actually generating the highest reward. And because those returns are so good, even more money just keeps pouring in. In a typical year, US startups get something like $150 to $200 billion in venture funding. Now, to put that number in perspective for you, that is more funding than startups get in China, Europe, and India combined. The sheer scale of capital ready to be deployed in the US is just on another planet. All of this creates this incredibly powerful, self-reinforcing cycle.
people call it the innovation flywheel.
Okay, so let's walk through how this thing spins. It all starts with the LPs, those pension funds, putting capital into the system. VCs then invest that money into the most promising founders and ideas. When one of those companies has a huge exit, like going public, it creates massive returns for the original LPs. And then, all that new wealth and all that experienced talent gets recycled right back into the ecosystem to start the whole process over again.
And this flywheel doesn't just spin in a vacuum. It's supported by some really unique advantages. World-class universities pumping out talent and research, laws that are friendly to founders, a clear path to go public on markets like the NASDAQ, and maybe most importantly, a culture that doesn't just tolerate failure, it almost celebrates it as a stepping stone.
So when we look back at the iconic companies that have defined the last few decades, your Amazons, your Metas, Ubers, Airbnbs, it's easy to just credit the brilliant founders. And look, they absolutely deserve it, but there's a hidden partner in their success story.
They were built by this entire system. They were funded by the collective capital of retirement funds for millions of teachers, firefighters, and government workers, all channeled through venture capitalists who were forced to hunt for those 1000x returns.
Which kind of leaves us with one last big question to think about. Maybe the real secret to world-changing innovation isn't just one person's brilliant idea. Maybe it's having a system totally unique in its scale and ambition that is willing and able to fund 1,000 failures just to find that one success that changes everything.
So venture capitalist funding is just one aspect of the secret sauce that enables US to create such global oligopolies, which are companies that influence several nations by their goods and services that are irreplaceable. What are these other facets and pillars that are present in US that uniquely is poised for creating such wonderful stellar companies? Stay tuned.